All right, let's go. Here we go. Benefits of attending today. I don't care what type of trader you are. Using these compelling patterns to either trade technical analysis, which is the foundation of what we do at Master Trader, or whatever type you do, fib retracement, scalping crude oil like the last gentleman mentioned, I don't care what it is, you will increase your odds of success by having a compelling pattern before you enter the trade. We're going to share with you our top 5 in this session today, show you how to use multiple time frames to line up the bias. And then I'm going to show you what I called our income strategy. These exact patterns that I'm showing you today, many of them are directional trades and many of them are, hey, that's a high probability turning point. I'm going to sell some calls or puts around it and make money by time decay of that option that I'm selling. At Master Trader, we're always thinking about, we consider patterns like thought processes. Each bar and pattern are created by the sum total of all market participants. So we're going to talk about what really moves stocks, how are these patterns created, and we call it reality, we call it objective, we call it is what it is. Subjective is defined as something appearing in your own head, and that could be the talking heads on CNBC, it could be rumors, it could be news. That is all nonsense to objective patterns. And then at the end, I have a couple of gifts for you also, but one of them is going to be on this income strategy. Renee gave me a nice introduction, appreciate that. But, I've been in the market since the early 1990s, worked for a big worldwide proprietary prop firm. We consult for, hedge funds on directions and option layover strategies. And the reason I'm showing you these 2 pictures is not only because I love flying and being a master captain, but I think trading is such a remarkable business opportunity. I can take my 15-inch Dell laptop anywhere in the world and I can find opportunity. That's what we teach. You don't need any fancy degree whatsoever. I have a bunch of fancy degrees. None of them matter to successful trading. And what pilots, captains, what they have in common is they follow a mechanical approach. They aren't emotional. They go through their checklist, and that's how we approach trading. And that's what I'm going to share exactly with you. Our obligatory disclaimer, which is kind of, common sense. We are speculating in the markets, whether you're a trader or an investor. I don't care what venture you speculate in, real estate, anything. You have to put up money to try to generate a return on that. And that's what we do. And everything has to boil down to high probability setups, proper position and trade management, and then you just simply manage in between. That's all trading is. We're exchanging inventory. We aren't exchanging, shirts and shorts like Macy's does. We're exchanging inventory, whether it be a stock, a commodity, ETF, currency. And that's what we're going to do today. Show you our method. And it's this simple. It's a high probability setup, enter and manage per your trading plan unemotionally and objectively. There's some trading firms out there who frankly don't believe in charts. And if you're one of those persons, then this is going to be a eye-awakening session for you. Chart patterns are our edge. And the reason technical analysis works is what I alluded to earlier. There's many people involved in the markets simultaneously. Charts are the only thing that paint the total summation view of all market participants any minute of the day, any second of the day. And that's what we're reading to give us a bias of who's in control of the stock. Once you are very good at reading technical analysis, then your job is to get experience. And the psychologists talk about the 4 stages of learning. And the first one is you're unconsciously incompetent. And what that means is you're an idiot, you don't even know it. Once you become consciously competent, that's when people usually start finding us. They're like, all right, I've heard you all are great. I've been doing things wrong. I'm tired of losing money. I don't know what I'm doing. That's when they come to us. And then we all want to get to the unconscious competence level, which is, it's easy to us. We know our procedure. We've done thousands of trades. And then, one time, one of my students said, I said, what did you do wrong? He says, it wasn't you, Dan. It wasn't the teaching. It's the nut behind the keyboard, referring to himself. And that's that tip there on the bottom. You have to have the discipline and patience to follow your trading plan and your method. No setup, no trade. You'll hear me say that all the time. Just like hunting. A hunter doesn't go out to the deer stand and just start shooting. He has a procedure of what he does to hunt in a high probability fashion. I know there's a lot of oscillator folks out there. There's a lot of companies that try to tout their magical indicators. At Master Trader, we think this is garbage. It's confusing. Oscillators are derivatives of price. You're going to see on every chart I show you today, we use simple candlesticks, a couple of major moving averages just as to speed up the process of analysis on multiple time frames. And that's all we need to determine who's in control of the stock. These things, look, are you a chart artist? If you get led into believing, oh, this is the magical indicator, here's the magical number, and then it stops working, then you tweak it again and say, all right, well, now I think I've found it. You don't need it, folks. These are what we call the Master Trader money patterns for swing trading. All patterns come in different shapes and sizes and quality. I don't know what multiple time frames are. But every one of these pictures is a bullish setup. That doesn't mean I'm going to enter right away. I go through my trade checklist, and there's other considerations, of course. But I'm going to show you this since we're also going to be talking about option trading today. Here's what we do in selling a bull put credit spread. We find a bullish pattern like this. We say to ourselves, I don't think that stock is going to go under that green line. So I'm going to sell a put option, which I put money in my pocket in your brokerage account, and I have an obligation to buy the stock on or before expiration at this agreed upon strike price. But using technical analysis the way I'm going to show you, there's a high probability of it not going down there. That's selling a naked put. If you wanted to do what's called a bull put credit spread, you take some of the money you just put in your pocket and you buy a further out of the money put, and that you make it a spread, and that way it limits your risk in the event of a big gap against you. And secondly, it's less maintenance requirement at the brokerage firm. The difference is what we call the net credit. That is our maximum gain if it closes above that green line. Again, once we're in a trade, we're in trade management mode. We don't just go to sleep and wake up on expiration and see if we've made or lost money. Another quick just summary here if you don't know about options. So buyers and sellers of options, they have different expectations. The buyers, they're paying money for the right to buy or sell something. So sellers, which is us in this example, we're taking that money using the charts because we don't think it's going in that direction. That's 100% profit to us if it expires worthless. And because we're putting money in our pocket for selling these out of the money options, they have a higher probability of profit than trading the stock alone, because the stock can even go against us and we make money. As long as the technical pattern is not breached, as long as those support and resistance areas are still intact, we make our money. Master Trader top patterns, here we go. These are the 5 we're going to talk about in the next 45 minutes. Buy and sell setups, breakouts, continuations, igniting gap, and M&W reversals. Master Trader buy and sell setup. You're going to see how simple we keep things here. This is an uptrend. What is an uptrend? Higher pivot highs, higher pivot lows. What we're looking for in a buy setup is a picture of buying, a reversal bar on support on the retracements. And we do that until the trend ends. Likewise, on a sell setup, it's in a downtrend. I'm going to short every sell setup once I get a reversal, and every breakdown until the trend ends. It's that simple. You aren't going to hear me talking about any kinds of fancy shooting stars and this and that. We're just looking at the candlesticks to give us the messages. Keep it simple. I have an uptrend here. I have a pullback to what we call minor support, which are these prior highs. Major supports is prior lows, and I'm waiting for my reversal bar. I have 1 red bar, 2, 3, 4, 5 red bars, green bar, bottoming tail. Now I buy over the high of that bar, stop under the low. Little Iggy here, and actually every one of these trades we gave to our subscribers. So these, we find these daily. Little Iggy here. I had no interest in this stock. We use the 20 as the blue line, 50 is the green, 200 is the red. You can see 200 days of data is declining. These moving averages are telling me the stock's in a downtrend on multiple time frames. We had a little attempted breakdown on this bottoming tail, wide range bar, consolidated over time, broke out, pullback, minor support, bottoming tail, rising 20, buy over the high, stop under the bottoming tail. That's it. This was one we actually gave in our trading room and our subscribers yesterday. KDP. We do in our green live trading room. It starts at 9 a.m. Eastern. My partner Greg Capra is the phenomenal technician. He starts with a morning market review, our bias for day trading and swing trading, review market internals, review sectors. I review all the gappers, news items, and open positions. And then throughout the day, we're looking for new opportunity, we're scanning together, and we're answering questions. It's educational. This one came from one of our subscribers, Jackie. As soon as Jackie asked me, Dan, what do you think of KDP? Greg and I, we like to use the term, it's a no-brainer. It's a no-brainer setup that the odds are overwhelmingly in your favor, that you get on board, you calculate your proper stop loss so you know what your maximum loss is, and you just manage in between. So this was a master trader buy setup. Look, this is all noise. I have no desire to participate in this stock until now. I had a breakout here, which we're going to talk about in trade setup number 2. We do not buy breakouts that go from the bottom of the range to the top. This one broke out, so I have a higher high. This little bottoming tail is what we call a downside shakeout. What happened after the breakout? It retraced in a bullish manner for 1, 2, 3, 4, 5 bars. It held the upper 50% of this. We buy over the green bar, and since we didn't have a bottoming tail here, we gave the original stop under this bar. But now that I refer to this as it has sufficient altitude, then we move our stop under that current bar. So it's a beautiful buy setup with no stress. Number 2, breakouts and breakdowns. Let's start here on the bottom left. Stocks can only do 3 things: go up, down, or consolidate in a trading range, go sideways. So this one's sideways. We don't buy breakouts, as I said, that go from the bottom to the top. This is a higher low, and I'm going to show you if they consolidate up here, then that's buyable. But this is the correct area to buy. It broke out, pull back to minor support. Now I'm in an uptrend. I'm getting in at the perfect spot. Minor support, pictures of buying on my reversal bar, manage in between. The breakdown, just the opposite. This is the same little Iggy that we just talked about. Bullish, this is what we call a wide, WRB is a wide range igniting bar. That is the sign of power. This is indecision. I got over the red bar, red, green, topping tails, bottoming tails. This is indecision. This is clarity. Volume confirms it. Stocks that don't retrace are stronger because they're consolidating over time and they're not pulling back to allow buyers to get in at cheaper prices. This is a correct breakout trade because it consolidated at these highs instead of running from the low to the high. That's our correct breakout play, and then this is what we showed you before on our buy setup. Garmin here. Also, no interest in this for a while, even though I have major moving averages rising. But let's take a look at what's going on here. This was a deep retracement, but then I have 100% retracement. Now I have a 50% retracement. Now I have greater than 100% retracement. That's our correct breakout play right there. Every pattern I'm sharing with you today works on any time frame, any tradable instrument, as long as you can show me liquid candlesticks, not gaps on the charts and things. It applies. This is an intraday 5-minute chart of Facebook. Got creamed this particular day. This is actually, if you use some of the terms from Steve Nissan's a classical technician, this is what we call a big reverse head and shoulders. But I don't care about the name. Let's talk about objective. This is in a downtrend. Downtrend, lower lows, lower highs. That is a mathematical fact. What happened after this new low? Almost 100% retracement. Then a higher low. Then consolidating at this resistance. The buyers are stepping up. That is my breakout point. The concept of what we call a price void is when you have momentum moves like this one down, of course, and then you build a base of support. Once it breaks back out, there is not much resistance for the stock to move higher. So this was a beautiful breakout reverse head and shoulders, we call, you know, this breakdown failure or downside shakeout. And that's another one of our favorite strategies that we won't have time to get into today, but I'll still point them out as we go along. We love shorting. My moving average is rolling over now. This did try to break out right here. I'm sure that sucked in some buyers. And then it failed. It broke down. Now I have lower lows, lower highs. Look at all of this consolidation. Remember I mentioned a few moments ago, if something cannot retrace, then it is weaker. So this is a bearish consolidation into the declining 20. We would be pounding on this stock short, right where this arrow shows you under that bar. Went sideways again. I'm going to show you one of our professional gaps as our number 4 trade setup today. This was a gap breakdown. Once again, it went sideways here for 3 weeks. Every time it tried to break out, it has a little topping tail. It is still weak. So we short every master trader sell setup, and we short every breakdown, quality ones, of course, until the trend ends or gets climactic to the downside. Number 3, master trader bullish, 1, 2, 3 continuation. I'm in chat here. I just wanted to see if I have questions. Oh, I did. Sorry about that, folks. Oh, shoot, I was looking at chat. There's a lot of questions here I haven't gotten to. Let me read a few of them. Have to make sure it's not a fake out. Well, you're right. You don't know on a shakeout. You don't know that it's one until after the fact. Absolutely. Candle pattern suggested, but not terribly reliable. If I'm not sure what your question is. If you're saying you're not quite sure if technical analysis works, please stick around. That's what we're talking about. And we have about an 85% batting average, both on stock and option trades. But again, everything starts with a compelling pattern on multiple time frames, and then we time it with the market internals. Anyone who says they have anywhere close to 100% success rate is lying to you. So I would just run. This is a 1, 2, 3 setup. This is just a 2-bar setup. Oh, the YouTube channel name, it's just Master Trader. And you can email me any questions and I can send you the link also. It is a wide range bar. What is a wide range bar? One that's just visually much bigger than the others. Remember, keep it simple. We love these wide range bars that come out of consolidations, and a bear gap negated is a plus. Like this one. This was actually a bullish 1, 2, 3 right there also. Here's another one though. But this one's different than this one because this closed over resistance. The second bar is an inside bar, it could be red or green, relatively equal highs, and it must, the range of the inside bar must stay in the upper 1/3 of this one. That's it, that's the setup. The 3 on this refers to you're buying over the high of these 2 bars. That's your continuation. This is a daily chart, but the concept is the same. If you would, and this actually had 2 inside days, which makes it better. If you would look at it, let's say a 15-minute chart, there's 26 15-minute bars in a day, right? 6.5 hours. So this has 52 bullish 15-minute trading range in the upper 1/3 of this bar. Zulu Sierra, we're in this trade. We gave this last week. So I'm going to show you a lot of recent trades, and we find them all the time. This is garbage. Everything's garbage here until now. But notice this big move made a new high. I had my 20 above the 50, above the 200. Bottoming tail. This was a bearish gap, sold off, closed at the high. Bottoming tail, bottoming tail. Now, wide range bar closed above resistance, both on the daily and the weekly chart. I got my inside bar. This is a directional to buy over the highs, or we sell a put spread under the low. And that's exactly what we did. We did both. We did a covered call, and then see this 45.15? We sold the $45 puts. We bought the $40 puts to make it a bull put credit spread, and we're already at 50% of max profit. They expire this next Friday. Here's one to the downside. So we call this a bearish 1, 2, 3 consolidation. And I'm showing you multiple time frames just because when multiple time frames are in alignment with this price void concept. So on a short, a price void means look to the left and there's not much support there. Let's analyze this. I have declining 20, declining 50. I have lower lows, lower highs. It tried to stabilize, but every time it tried to break out, I got topping tails. It's being met with selling. Now I have a decisive, ugly break that closes under this multi-month trading range. I got my inside day, which is 26 bearish 15-minute bars. You short the low, initial stop is over the high of this big red bar until it gets altitude, and then we tighten the stop. Weekly chart here in the bottom right, same thing. Topping tails, declining 20, declining 50. Wide range bar, closing to new lows. Monthly, a bearish 1, 2, 3. Right? That's a bearish 1, 2, 3, both on the daily and the monthly. Look to the left. There wasn't much support over there. And I just threw this little box in here to see what happened afterwards because we were in the trade. Look at your little 1, 2, 3. So in 1, 2, 3, 4 bars, fell 30 bucks. Multiple time frame alignment. How do I get the sound? Maybe Renee can help. Number 4, professional igniting gap breakout. What the heck does that mean? We call a professional gap one that's igniting a new move. And we aren't going to talk about it today, but a novice gap is an excessive gap in an already extended move, and that typically ends the move. We want it to clear significant resistance and have always a price void to the left. It can be from a consolidation like this, or one of you asked a few moments ago about a shakeout. You don't know until it happens afterwards. This would be an example of one. For an example, let me just show you back on this chart. Let's say hypothetically, this pattern gapped up to $400. That would be a shock to everybody in here. And we're going to talk about gaps right now, and you'll see some examples. But that I'm showing you an example of this would be one shocking all those people to the downside. Step 1 is this, and we do this every single day in the green trading room. We focus on these I call them the tier 1 gaps. Tier 1 meaning everything is in alignment with the gap, with the price void. And then I put it in a 5-minute window, a little chart. And all I'm doing is seeing if I get a confirming intraday setup. Yeah, I think Renee will send out recordings of these. And you know, I have 40 slides here today, but I had to go through and cut out. I could have given you all 100 slides because we just find compelling patterns, you know, some more than others, of course. We're like the hunter. If there's nothing compelling, then I'm going to tell you that. SMTC, multi-month trading range. I have pretty much flat 20 and 50. I have major resistance points. I have major support points. And it gapped right over resistance. In Greg Capra's advanced gap strategies course, he has a 7-step checklist. And one of those is the gap too excessive relative to the target and the pattern? And it's just a visual thing. We like these that gap just over resistance. So this one gapped to, you know, let's call it 53. What if this gapped up to 63? I would say I have no interest. The gap too much. Multiple time frame alignment. This is a wide range breakout on the weekly chart. You had a weekly trading range here above the 20 MA. We gave this both as a directional trade and a put selling candidate. We love selling puts, short-term puts, even on the day of expiration, because particularly when volatility is high either in the market because the spiders have been selling off for a couple days, or the stock's been selling off, or earnings. We specialize in this, selling options on earnings because of volatility. We would then find our entry. It might be 30-minute high, and then we sell an out of the money put. In this case, we might, ideally it would be under support like this, but if something's really bullish, we might sell the $51 puts. Another example, SEND. This is a mess. This was a short right here on the breakdown. It's a mess. Although I could sell a put spread right here on this little engulfing bar. Gapped up just over resistance. I have a bullish weekly. So step 2, go to your intraday and find a compelling entry. I look at many compelling gaps, but many of them don't pass part 2, which is this, compelling entry intraday. These dotted vertical lines are pre-market, and this was not as liquid as I like, for this pattern. But as soon as the market opened, big green bar, moved up again. This is an ideal 30-minute high trade. Now you have this consolidation in the top range of this big 2-bar move. This is what we call a no-brainer setup. No brainer. You buy a 30-minute high, stop the low, manage in between. This is a pro gap that we gave to our subscribers yesterday, just yesterday. Mohawk. Big reverse head and shoulder. This is a mess. I wouldn't trade this. Overlapping bars. It's a mess until now. It gapped up over this resistance. You can see the weekly is also a nice reverse head and shoulders. Then we drop down to our intraday time frame to give an entry. This is our weekly options trader, where we specialize in just selling these options with 10 days to expiration or less. This is our income trade. Check out the math here. 7 days to expiration. We sold these yesterday and they'll expire next Friday. So here's my 130 put. We sold the 130. We bought a 120 just to make it a defined risk trade, 7 days to expiration. It was 140 at the time, but when it triggered, we got $1.20. $1.20 divided by 880 maintenance requirement, that's 13.6% return on capital if this expires worthless. And the reason I'm showing you this other stuff is this is how we send alerts intraday to our subscribers. This was a text alert, and we give them for new trades and adjustments on all opens. We give an explanation of the technical setup, stop loss. This is rare when I say none for now, but I needed to get some more data before I figure out where the stop's going to be. But Adam, it should not come back under this prior bar's low. And then I also, right in the moment, many times do videos. And I just did a quick little 2-minute recording and dropped that in the link, and they can watch it on their computer or iPhone. Here's another one. Pro gap out of this consolidation, wide range bar, and I got my 1, 2, 3. Over the high of these two bars, we sold an out of money put spread, sold the 97.5, bought the 95. This one had 10 days to expiration, 57 cents a share. So if you sell 10 contracts of this put spread, $570 would hit your brokerage account immediately. What does that mean? It means if you don't mind being assigned the stock at 97.5, it's yours to keep, and you've improved your cost basis. You're agreeing to buy the stock at 97.5, but as long as it stays above this, it expires worthless. The person who paid you $570 has lost his money. The return on capital, 57 divided by the maintenance requirement, almost 30% return on capital for 10 days. This is our weekly options trader. Start with the chart. We just determine price levels that are not going to be violated for a few days to expiration. We use the master trader method. These are great, as I said, gaps, earning, failed patterns, volatility trades. We do a lot of selling options around the SPY, the S&P 500 ETF, because it has multiple expirations during the week. I have some people in my room that I think maybe, I mean, they live for Friday. They're like, all right, it's option expiration Friday. Can't wait to, sell more. We have a defined portfolio of stocks, ETFs, indices, currencies, commodities, but we'll trade anything with a compelling pattern that has tight spreads. Go to mastertrader.com, weekly income, and you can check out that service. It's only $39 a month and less if you're a subscriber to our advisory letter. So many examples here. Beautiful, beautiful gap, JWN here. And this one's kind of a shock pattern also, because see this ugly red bar? That's now negated. Breakout on the weekly, multiple time frame in alignment. Bullish consolidation over time with a bottoming tail. That was another entry. That was another swing trade breakout right there, and another put selling candidate under this bottoming tail now. Again, once you have the methodology, trading is fairly simple. HMNY, this thing used to be $1,100, and they had to keep doing reverse splits. I have declining 20, declining 50, a bearish pro gap, bearish consolidation, another breakdown. Look, this thing could not bounce. I have 1, 2, 3, 4, 5 days of bearish consolidation with nothing to the left, meaning no support to the left to stop this. This is a no-brainer continuation short with a stop over these little bars. All right, Adam's asking why use SPY, not SPX. Adam, I've looked at those for many times, and it's just the SPX is the big contract, obviously. the spreads are wider, and I don't like the efficiency of them. If you wanted to trade the futures on the big contract, I have no problem with that. But in terms of our directional trading or income trading, we just love it. It's a very liquid, tradable instrument, so why look elsewhere? Final pattern for the day. M and W reversal patterns. They come in different flavors. Let's start with the bullish ones on the bottom. This is a picture of a reversal. So remember our buy setup? This is where you would be buying, but in an uptrend on minor support. That was that one. Now, but these you can trade in any trend, even though they're higher probability, of course, if multiple time frames are bullish. But particularly in bottoming patterns that have gotten crushed, and you might say, oh, I'm trying to pick the bottom here. Don't do it. Wait for one of these three pictures. We're looking for a flavor of a bullish retest. NL shock, what does that mean? It means it made a new low, so it's still in a downtrend, correct? It's still lower lows, lower highs. But it made a new low and ripped right back up, and this engulfed the red bar. This is a beautiful, beautiful pattern to sell out of the money puts on. What's the flavor of this one? A deep move into resistance and then some type of retest. Here we had a couple bottoming tails and then a big green engulfing bar. Retest of potent reversal. What does that mean? Well, this big old green bar is a lot bigger than the first two. So that buyer stepped up with vengeance here, and now they're retesting that potent reversal with another reversal. And then I'm not going to go over these, but they're just different pictures of them on all time frames. This was Facebook when the FTC was coming after them. It fell almost 13% in just a couple days. I tell our subscribers, we will be trading you. It's just a matter of when and what strategy, and if it's a day trade or swing trade. But I will be trading you. Since volatility was so high because of the sell-off and the news, volatility was 96% out of 100. That means you look at Facebook's volatility for the prior year, and it was pretty much at the high. And that makes the option prices go through the roof. Am I buying a falling knife here? I don't have my put. This is not a picture of that prior slide that I showed you. This one is. I got a climactic buy setup. I got two bottoming tails. I have big move, and I have a retest, and I have a big wide range igniting bar on support. Over the high of this big green bar is my entry. We decided to sell a bull put credit spread. The low here is 162, but we still, folks, if you haven't done this, you should be salivating on your keyboard right now if you follow what I'm explaining. We went $7 lower than this 162. We sold a 155 put, and we bought a 147 put. $560, 3 days of risk. Return on capital, 7.5%. Remember I said one of the benefits of selling put spreads is they can go against you and you still make money? Well, we put this one on, let's just call it 164 bucks. So the stock could fall $9, 6%. That's what I call my cushion to max profit. Tell me how you can do that trading stock. oh, I want to buy Microsoft, and if it falls 6%, can I still walk away break even? The Microsoft market maker is going to just tell you to go hit the road. Different flavors here, but every one of these were bullish patterns, and you know, this was a gap from a bullish retest on the rising 50 at the gap fill support. This one was a retest with a little shock pattern negating the red bar and a big green bar above the rising 50. These are pictures of, again, what I call the no-brainer put spread candidates. These are just, I threw out some other strategies that we teach. Shakeouts, I've shown you a couple of those today. Failed patterns. Now, people who do read technical analysis, and they might have put in, they might have entered rather, a compelling pattern, and then they don't know what to do when it fails. We have learned, and we teach failed patterns for two reasons. One is, in case you're in the trade, you'll know that it's a failed pattern. One of them we call a breakout failure. And the other is to recognize when others are wrong, and we want to profit as a new setup. We have bull and bear traps. Those come in all different flavors, climactic buy and sell setups. You all, if any of you like trading climactics, we traded one in the green trading room the other day, and I think I just posted it to our Facebook, our private Facebook group. So if any of you want to join that, you can send me or just go there and you know, ask to join the group and say that you were with this session today, and we'll grant you permission. But I posted in there this morning one that we did, Cron, C-R-O-N, was a beautiful climactic sell setup last Monday. We have a pattern we invented. Well, we have gap and snap, gap and crap, bull and bear gap surprises, gaps that bully. I know that's a crazy name, but it's a failed bullish or bearish gap that we turn into opportunity. So it's a flavor of a failed pattern. Wide range igniting, wide range ending bars, and you know, this reminds me of the folks who, like Tasty Trade. I mean, they're well known. They're a reputable shop that they focus on just being mechanical. They say trading by the numbers, and they 100% don't believe in technical analysis. And we did a webinar. You can find it on our webpage, mastertrader.com. Just hit resources, and we have Master Trader Live, which is a live educational program. My partner Greg and I do live every Wednesday, and we put it on YouTube, noon Eastern. So those, I highly recommend that you will just sign up for our chart of the week at mastertrader.com, and then you'll get the notices of MT Live. But we talked about this in selling options, that if you don't look at charts, a wide range igniting versus a wide range ending bar has drastically different odds, and you are just, it's like you're running in traffic blindfolded if you don't look at charts. That's our view. We love shorting. You know, we have different option strategies on the spiders during mini crashes, and selling call spreads and other bearish strategies on volatility ETFs, because they have what I call headwinds or contango. Folks who get misled into thinking, oh, volatility's low, let me go out and buy some volatility ETFs or options or futures. If you don't know what you're doing, you're playing with fire. I'll just put it that simple. Whatever we call this, whatever we call the typical whatever strategy we're looking at, even the top 5 that we just went over, once you learn the Master Trader method, you have all of the knowledge and thought building tools to objectively know what to do on any setup, any instrument. You can read the messages, and you can take a bullish, bearish trade or stand aside. This is our swing trading course Greg Capra made, and it is absolutely phenomenal. He's been, I call Greg like just an absolute pioneer in the technical world, in the direct access internet days. That's where I met him in the mid 90s, and we've been at this almost 30 years, each of us. But you see me talking about options a lot. I find options just so much easier to trade than stocks alone, because I put the option trade in a more positive probability of profit scenario. And our expertise is taking that same expertise in technical analysis and applying it to option trading, whether it's directional or income. So check out this course, mastertrader.com/swing trading. And this is our Mastering Advanced Credit Spreads course. This is 12 detailed modules showing you how we look at the charts and decide which options to sell, how many days to expiration, how to manage them in between, how to trade these news, earnings, gap stocks, I do have a whole module dedicated to trading those volatility ETFs. That is an incredible course, and I've gotten hundreds of testimonials that it's really changed people's lives, and that is a big plus for us. What we're going to do here is a bonus for you today, and Greg just called me right before saying, hey, let's do this for him. You buy the swing trading course. Yeah, that's Mr. Greg Capra, absolutely. He invented the Pristine method, and then he sold Pristine to a group out of New York, and I've been working with Greg since the late 90s, even though I went off for a while to work for a prop trading firm. But yeah, he sold the company, and that was good news for me, because that freed him up for he and I to partner together. Here's what we're going to do for you. Buy that swing trading course. It's $800, and it is worth, if you learn the messages from it, it's worth $50,000. And we're going to give you your choice, the Advanced Management Strategies course, AMS. And you know, it's kind of sad, but it's human nature that people get all excited about the patterns and clicking in the trades and you know, just focusing on that part, which is important. But without a proper foundation on money management, the odds are overwhelmingly less that you aren't going to survive. That's part of his main course on the Master Trader method. But this is also a separate course, $595, that people can buy individually. We'll give you that for free, or the Mastering Advanced Credit Spreads that I just showed you here. This one's a $400 product. Either one, we're going to give them free for spending $800 on the swing trading course. Go check them out on the website. You can read detailed descriptions. And now two gifts for you as we wrap up here. Our green trading room that you've heard me mention, and you can have a 3-day trial, no cost. Go to mastertrader.com/green trial. Yep, James, yep, that is the one and only Greg Capra. I'm telling you, folks, if you don't know Greg, he's my good friend and business partner. We formed Master Trader together. But he is the most skilled technician I have met in my life. I remember learning from him 20 years ago. I'm like, Greg, well, that looks extended. And I made this list called Capra-isms, because he just says some things and they have jewels of information. And he says, well, guess what? It's about to get more overbought. That's because his brain was looking at everything, and this is when I was a beginning trader, of course, and now I understand what he means. But you're only going to get to that point if you take his course, and then you get seasoning. Start paper trading. Start with small. If you do options, one contract. Start with 50 shares of stock, and you have to follow your trading plan, and that's gonna make your brain, it's going to develop your trading plan so you know what to do. Of course, every day is different, but we teach you the tools to know what to do in every single environment. Here's my other gift to you. I just wrote this last quarter for Traders World magazine. There's some folks out there who say, oh my God, don't ever trade, don't ever sell short-term options because they're so risky. There's this thing called gamma that is so risky. Gamma is only a concern to people who don't read charts. We do this every single option expiration day, and all you do is call a top or a bottom on an ETF or a liquid stock. We did it on, I showed you that one example on Amazon. We did on Friday. We sold that for $1.09 a share, and I hope nobody would sell a 10 lot on Amazon, but just for the math, that's almost $1,100 gain just by calling the short-term top on Amazon for a couple hours. So that's it. Feel free to email me, Dan@mastertrader.com or Greg@mastertrader.com on any matter whatsoever. We hope you learned a lot. Come join our community, sign up for the chart of the week, and check out the MT Live. It's free, and our YouTube channel. We give tons of wonderful information.